across to Arnab Das, the Global Market Strategist of Invesco, joining in now. Sir, how are you reading this? Is this just, a short reaction, one would say, because Dow finally snapping that 8-week losing streak that we saw, although you are seeing this turnaround, or is this just momentarily?
Well, let's hope it's more than momentary. I think, the question really is, sort of the issues that you raised, right? Has inflation really peaked, and is it going to fall from here? And can that happen without the economy slowing down and without the Fed having to tighten monetary policy and tighten financial conditions further? I think one other thing that does seem to be happening is that the market has sort of priced in a bit more of the tightening that the Fed has signaled that is coming down the pipeline. So that's probably helping with the market, as well as the fact that some of the negatives earnings releases that came before the last couple that were more positive, those have improved valuations in the equity market and in the credit markets. And of course, bonds had sold off quite a bit as well. And then one final factor is probably some month-end rebalancing. If we try to look through all of the short-term noise, though, I think the real fundamental question here is whether inflation is really coming down with, let's say, with a softish landing, to use Chair Powell's expression, in the works. I think that's still very much possible. And, there are very good reasons to think that Americans will continue to spend, but maybe cut back a bit on the growth of their spending, right? The housing market seems to be, coming off a bit. Household wealth is down a bit, although, the levels of household wealth and the levels of savings are still quite high. So there's still spending power, but it's being more constrained by inflation and by financial conditions tightening, which should help with this softish landing argument.
Would you throw some light then on how the bond market is reacting, and whether that is also something that will sustain, or whether that is something that the Fed will really have to take note of, given how people are reacting to these figures? We just saw that, the preferred gauge range of inflation rising to 4.9 in April, a sign that clearly shows that things are slowing down. So how is this going to really impact the other markets, not just equity?
I think you're absolutely right to focus on this is kind of the $100 trillion question in a way, right? That how far do bonds have to sell off? There's been a bit of a cap on the sell-off and a bit of a recovery as the market had gone from being sort of selling everything, the opposite of the everything rally, to reallocating between equity and risk assets back into bonds. I think what's going on there is a realization that, even though inflation is very high right now, there are probably going to be significant limits to how high inflation will be in the future, right? We're not going to have this continuous string of, 8.5%, 10%, perhaps, low double-digit inflation rates coming through, especially if the Fed continues to tighten, even if it doesn't do what's much more than what's already priced in. So I think we should expect the Fed to continue to tighten. I think that, there's still a significant risk of volatility in both bonds and in equities and other risk assets as a result of that, as well as the difficult global situation, the threat of stagflation in Europe, stemming from the geopolitics of the Russia-Ukraine conflict, and of course, the slowdown in China due to the zero COVID, zero tolerance policies that have locked down much of the country from time to time. So I think we have a number of headwinds to grapple with still, right? That inflation still has to come down durably, that there are these challenges to the growth process. And all of this, kind of inflationary, stagflationary pressure from the commodity market. So I think if you put all of that together, I think you have to still expect the Fed to continue to tighten, maybe not to go extremely restrictive, but to go in the direction of being more restrictive, with some risk of financial conditions tightening further, but maybe not really a very severe, more of a correction, maybe not a full-blown bear market. Let's put it that way, right? And be constructive about what might lie ahead.
Right, like what you were saying, we are going to expect the Fed to only tighten further. There are other reports saying that they might take a halt by September, but seems like that's the only way forward, even when it comes to in India back home, where you are seeing this hawkish stance even from the central bank back here. But thank you so much, Arnab Das, for giving us your time here on ET Now. That was a perspective on how the US markets are really